Welcome to Just Minding My Business. I am so happy that you dropped by. I have a question for you. What if your next business could rival real estate returns without consuming your entire life? Today, our guest, Bob Bernotas, helps corporate leaders and investors do exactly that through smart, semi passive franchise ownership. Working in franchising since 1986, he has been a multi unit owner, a franchise CEO, and an advisor on many deals. Today, Bob guides clients to build cash flowing franchise portfolios that align with their lifestyle, risk tolerance, and financial goals. He helps clients avoid trendy, high risk brands that drain capital. Wow. Welcome, Bob.
Thank you, Ida. Glad to be here.
Absolutely. So you are definitely seasoned, to say the least.
Since 1986. Yeah. No, in my defense, I was a kid in my 20s, so I'm kind of a dinosaur, I guess, in the industry.
Yes, and that's always good because we know you've seen it all.
I
We
have.
know we know that you got the battle marks to show.
I do. I do. No doubt about that.
So the timing in franchise success, what does that involve?
The what? I'm sorry.
Timing.
Oh, good question. So when it comes to timing, and this is when I'm working with a client, I try to stress this. The the dirty little secret in franchising. I hate to put it that way, but it's truthful. I mean, there's over 4,000 different franchise concepts out there. Honestly, 75% I would stay away from. Never want to put a client in a position where they're simply buying themselves a job. Out of the other 25, 30%, there's some good ones, there's some better ones, there's some exceptional ones out there. But when it comes to franchising, it's all about timing. A lot of my clients, when I first meet with them and they start describing what they might be interested in, I always hear about the big brands. They want to be involved in Subway. They want to be in even something that very few people have heard of, like CertaPro Painters is a good home service franchise. Franchisees do great with, but it's sold out across the country. So the bigger brands typically are going to be sold out.
Mm-hmm.
The real art in this game is finding the right brand at the right stage of its growth curve. If we can reliably predict that that brand is going to sell out, let's say in my client's market, and which means it will predominantly sell out across the United States with time, that's a fantastic position to be in. Okay.
Mm-hmm.
Because if you get into a brand and a brand just doesn't grow and you decide you want to sell your franchise, it's going to be harder to sell because there's lots of open territory around you that somebody else can buy. But if you get into a brand that, again, we can predict there's going to be sold out in your market pretty quickly. When you decide you want to sell, you simply go back to the franchise company and say, "Hey, I want to put my business up for sale." And there's a lot of awareness because there's a proliferation of that brand in the area, and people are contacting the company saying, "This is interesting. How do I get one of these?" I'm sorry, it's all sold out in this market, but we do have a resale opportunity. We'll be glad to introduce you to Ida, the owner of the franchise, to negotiate a deal. So that's the positioning that I'm trying to put my clients in. And if I may make an example, Ida, I mean, I'm obviously been in franchising a long time, been a CEO of a national franchise brand, been consulting for a couple of decades. I'm still a franchise investor. The most recent one that I bought is a concept called Game Day Men's Health. It's a men's health concept that does hormone replacement therapy, ED treatment, weight loss, peptides. And I bought that at a time when the company had six corporately held owned units in Southern California. Wasn't comfortable with going forward yet, but when that brand got into the portfolio of an organization that I absolutely trusted, I
Mm-hmm.
knew that brand. It was a bigger entity, had the capital behind it. I knew that brand was going to grow across the country pretty rapidly, given the management team, given the unit economics of that particular brand. They had the infrastructure to scale. So as soon as that occurred, then very rapidly I jumped into it. I bought 6 units of that. I'm in southeastern PA, but I couldn't even move quickly enough because it started selling so quickly. I had to default to New Jersey, and I bought 6 units about 2 hours away from me in New Jersey, and opened the first one 17 months ago, going gangbusters, doing great. Second one opened about 7 months ago, and it's actually tracking at a better trend line than the first unit. High revenue and about a 30% profit margin. So it was a winner, but I know what to look for because I've been in the industry so long, and I knew that one was going to be a runner.
Yeah. So basically, what I'm hearing is up and coming.
Absolutely. But up and coming that we know up and coming can mean two things. It could be a
Okay.
brand that is on its own trying to be an up and coming brand.
Hmm.
Because it's new doesn't mean it's a good opportunity. In fact, with Game Day Men's Health, it was actually 5 years old when I started to track it. It was 6 years old when I bought it, but that's when that organization brought it into its portfolio at
Hmm.
that point. And I knew based on the brand had all the elements to be a really strong opportunity, but I knew at that point it was going to take off. Okay. But then there's plenty of brands that are on their own trying to do this. And I mentioned 70, 75%. Honestly, you don't want to go near. These are brands that are on their own trying to do this, few $1,000,000 to put together to launch a franchise organization. Most of them fail. Okay, they're not worthwhile. I only deal with brands if there's a bigger entity behind them, either a brand aggregator that actually owns the brand, acquires the brand, puts it on their platform. They provide the franchise expertise. They provide the infrastructure to scale. They provide the capital. They provide all the necessary elements for that brand to thrive, and then they grow it around the country. There's also an entity called an FSO, or franchise sales organization. And those entities, they don't buy brands, but they help brands grow. What do they get out of it? Typically, they're going to take half the franchise fee up front, and they're going to get maybe a small piece of like a half a point, half a percent on the royalty fee on the back end, but that gives them ample incentive to want to grow that brand across the country. There are dozens of each of those types of entities out there. There's only a small handful that are really good. And I try to work exclusively with those types of entities because I know the risk factor in getting into a brand is going to be much, much lower if that's
Hmm.
the case.
Yes, and that makes sense. That makes sense. So basically, explain to our audience what a franchise is and what the benefits are.
Sure. A franchise is simply, I mean, you look at any business that exists can be franchised and probably has been franchised, whatever the type of business is. But a franchise is a methodology of doing business. Okay, the franchise company has gotten into a particular field, they've launched some businesses, then they typically franchise at some point, and they create all of the infrastructure. They create all of the processes. They go through all the trials and tribulations. And once they have the model perfected, the better ones, okay? Some will launch too quick as a franchise organization, but the better ones will have all that perfected. And once they do, then they're going to start offering franchises. There's an old adage in franchising, you're in business for yourself, but not by yourself. Okay.
Yeah.
So it is basically they're giving you a playbook. They're giving you guardrails. They're assigning a business coach to you, the better ones that will work with you on a regular basis. They have all the marketing and advertising already locked down, so you know exactly what you need to do. Many of them will help you do any hiring. They'll find your location for you. They'll negotiate the lease for you. They'll negotiate as much landlord contribution to mitigate your build out cost of your location. They'll have an onboarding process. They'll have pre-sales prior to you opening your business, again, depending upon the type of business that it is. So
Mhm.
the better companies are doing a lot more franchisees for their franchisees, I should say, than the lesser companies out there. Over the last 10 years or so, more and more brands have emerged that are offering so much more. They're offering more of a semi-passive platform, more of a manage to manager platform. Like with Game Day Men's Health, the one that I bought, I have a very competent manager who runs it for me. At this point, my total involvement is a 1 hour Zoom call per week. Okay.
Wow.
What now? I'm not saying that's the way you should run the business. I think anybody should get into it, understand the business, put as much time in as they can. If it's a semi-passive brand, might be 10 to 15 hours a week for the first 6 months, and then you can start stepping back and spending less and less time. I'm pretty experienced, and my manager was really solid. So I was comfortable once, as soon as those got open, to turn over the keys to him, and he's done a great job running it for me.
Okay. Okay. Wow. So how does one buy a franchise? Let's say you still working and you want to have this as your backup for.
Gotcha. So I would say about 80% of the clients that I work with, they're in corporate America. They make good money. They don't want to walk away from that income stream, but they don't see themselves staying in corporate America forever. They're getting a little tired. Maybe they're concerned about, the layoffs occurring, which are obviously are happening at a pretty rapid rate. Or maybe they just want to create an off ramp from corporate America a year or 2 or 3 years down the pike. So typically, these individuals, I'll help them, I'll take them through a structured process that may last 8, 10, 12, 14, 16 weeks or so to identify the right franchise fit. I
Mhm.
help them with financing. I work with all the top financing sources to the franchise industry. Once they're approved for a franchise, they go forward with a franchise. The franchise launches. Most of my clients are, a year, 2 years staying in their job and like, well, why am I doing this anymore? I don't need to. I've already surpassed my income with the business that I'm operating, and most will step away from their jobs at that point. So there's different strategies going into it. Does somebody want to stay in a job long term and build side income? Does somebody want to jump into something full time day one and bite the bullet for a while if they have a severance package or something? Or does somebody want to create an off ramp a year from now, 6 months from now, 2 years from now to walk away from corporate America? So I work on those strategies with people.
Yeah, okay. Now, costs. Let's talk a little bit about that.
Yeah, and that is all over the map. But let me explain that. I mean, the franchises that you see out there that are below 50,000, they're not worthwhile. Okay. I would say the starting point is maybe 80, 100K to get into a decent franchise. That would be a service-based brand. It would be operated either from a small office, maybe a small warehouse, maybe some flex space, maybe even from your home, depending upon type of franchise it is, all the way up to how many millions would you like to spend? But I think there's a price tag for everybody. There's a lot of them that will fall between, let's say, 100,000 to 500,000, 100,000 to a million. That will be really, really good opportunities. And typically, with what I'm able to do with most of my clients is, okay, I want to use other people's money, opium, right? So typically, what the lenders are looking for is for the prospective franchisee to maybe fund it to the tune of 20% and maybe borrow 80%. Somebody wants to fund it 50% and borrow 50%, that's fine. There's even lending sources that'll take 10% down and fund 90%. So again, it depends upon the individual. We could talk about SBA loans. We could talk about portfolio loans. We can talk about unsecured loans. And again, I'll work with my clients on this. We can talk about something called a Rob's program, or the 401k rollover program, where you can roll funds out of a 401k or an IRA into a business without taxation, penalty, or interest. Very attractive instrument
Hmm.
if eligible for that, and most people would be. And most of my clients, I would say, go that route over SBA if they're eligible for it.
Wow. So it's definitely a lot of options here, Bob, from what I'm
There
hearing.
are.
So if people are interested in exploring this, how do they connect with you?
You can go to my website. It's franchisewithbob.com. Pretty simple. Or email me at bob@franchisewithbob.com. If you want to text me, it is 610-506-0002.
Yes.
Try to keep it simple.
Yes, exactly. Simple is great. So you talked a little bit about vetting a franchise.
Mhm.
Can you elaborate a little bit more with like the checklist that people should have in their
Yeah.
brain when they're doing that?
All right, and great point. I'm glad you brought that up. So, first of all, just the fact that I've been in the industry this long, I know everybody in it. I know who the players are. I know the groups that bring in the right franchises. So that's part of it. The other part of it is about 8.5 years ago, I joined a group of consultants. Okay, we banded together simply because it gives us a lot more clap. But we have a couple people that are part of our organization, and their sole function is to analyze franchise companies. Virtually every company out there has come to us at one point or another asking to be on our preferred list. I will also tell you that the vast majority are rejected. They just don't check the boxes that we are looking for.
Mm,
So all we pre-screen these franchises. Now I can take my clients to any franchise out there. 98% of the time, I'm staying within that realm of the ones. It's just a safer potential investment. And there's hundreds and hundreds of brands on that list. So that's a good starting point. But then what I do, most of my clients, Ida, are looking for they're more financially motivated. Okay. You have what I consider ideologues, people that might tell me, hey, I want a pet franchise because I love my dog. Or I want to be in something, a food related, a restaurant because I love cooking. And I always try to have a deeper conversation with them and say and ask them, how important is it to you to make money? Okay, because if you want to make really good income, we might want to broaden that, look at other things. Food can be a tough category. Some of the pet concepts can be a tough category. So I work particularly well with people when my marching orders are, Bob, show me ROI, earnings. I don't give a darn what the widget is as long as it's ethical and provides a valued service to the
mhm.
community. And for most of my clients, they're looking for semi-passive. Okay. So that's what I try to specialize in. And I know I might have gone down a rabbit hole. And what was your original question?
Oh, it was like, how do you grade them pretty much? And you,
Oh, yeah,
you
yeah,
pretty
yeah,
much did that.
yeah, yeah,
Yes, yes,
yeah.
for
So, I mean,
sure.
I like the ones that look, if somebody gets into something and they do not have financial success, I don't care if it's their passion. You may learn to hate your passion if you fail at it financially. Conversely, if you get into something, what I have found from my own personal experience, the passion comes from operating a financially successful business. So if you get into something that you never thought that you might be in, but you're having financial success, you may learn to absolutely love it.
Oh,
So
you're gonna definitely
I
become
like that.
passionate. That is a fact, Bob.
No doubt.
Yes. Okay, so you kind of went over the funding, you kind of when you went over the 401k option, which I'm absolutely loving
Mhm.
because a lot of people have that,
Yep.
and that would be an easier vehicle, I would think, to move into a franchise.
Yeah, I mean, basically what you're doing is taking funds from a 401k or IRA and just reinvesting into something else that should give you a much better return. Now, a lot of people are going to perceive this is a greater risk. Yeah, if you get into the wrong franchise, if you get into the majority of franchise, if you get into the right franchises, the risk is going to be pretty low. I always compare this to real estate, and I'm a real estate investor as well. I'm in a number of syndications that I've bought into, and that's a smaller piece of what I do. But I mean, I would all day long recommend that from a return on investment standpoint and financial upside standpoint, you're never going to build equity in real estate the way that you can build equity in a business. Here's again going back to my example, and I can give you example after example after example out of my clients, but my personal example is with Game Day Men's Health. My first unit is now 17 months old. I'm at a 100K, over 100K run rate. We'll finish this month up at, I have to check with my manager, probably about 120 and dropping 30% to the bottom line in this model. So, I mean, even if you said call it 100 times 30%, that's 30,000 times 12 months, that's $360,000 a year. I could easily sell this for a 5 multiple, easy tomorrow. That's 1.8 million. My investment was 350K.
Mm-hmm.
Okay, so where are you going to get that type of return in real estate? So many of my clients are actually real estate investors that now have turned to using businesses and leveraging that and getting into businesses and scaling those and looking for an exit at some point. I always work with all my clients, Ida, and one of the most important things that you could possibly consider when getting into a business is having an effective exit strategy.
Yeah.
Not necessarily from the standpoint, I'm going to build this for 5 years, 10 years, 20 years, and then have an exit. Great, multiple, lots of multiples, hopefully. But life events occur, and you may need to sell the business. That's why I said at the beginning, I want to put them in the best position. I want to be able to reliably predict that whatever brand my clients get into, it's going to sell out in their market. It's going to put them in a much better position to sell. And the better the profit margin, especially if it's a reoccurring revenue type model, like Game Day Men's Health is membership based. I love reoccurring revenue models because they typically will sell for a considerably higher multiple than one-off type concepts.
Mm-hmm. Absolutely. Now takes me to the different types of franchises that you think are really profitable.
Yeah, there's a combination of its profitability, but there's also what's the trends? What are the trends look like? And does it have legs? You don't want to get into something that's trendy, like a lot of food concepts, like if you're familiar with
Mhm.
Crumble Cookie blew up across the country, grew very rapidly, did very well. Now they're not doing nearly as well. Okay, because food tends to be fickle. Certain types of food concepts have legs and stay consistent. I mean, Panera Bread has dropped way off. So food always scares me. There's some good food concepts, but for the most part, as a category, it scares me. The categories that I like, anything health and wellness related now, and you can throw longevity into that super, super hot category that's going to be running for a long, long time. And so I love the health and wellness category. I like anything related to home service. These are boring businesses like the HVAC, plumbing, electrical,
Mhm.
landscaping, all those sorts of things. There's some really good opportunities there. They tend to be lower cost to get involved in, and you can scale them up over time, but they're consistently performers. People need it. It's not going to be replaced by AI. Okay.
Yes.
So those things I like, senior care, in-home senior care, the facility-based senior care can be extremely expensive. The in-home senior care they're pretty inexpensive, generally 150, 200K, you're up and running with those, and they could potentially be built into something very large. The only downside with senior care is you can put a lot of time into it, especially in the first couple, 3 years, expect full-time plus. After it starts to settle down, then you can start gradually backing off and put less and less time into it. So those are three categories I like a lot.
Yes. And I was thinking the health and wellness because every you can tell by television what the big thing is because everything
Yeah.
is about health and wellness, looking good,
Yep.
feeling good,
Yep.
so you can kind of gauge food right now, like you said, it's a little bit iffy. I'm seeing KFC sales going down. I'm
Yep.
looking like right in my neighborhood, one has shut down.
Yep. Yeah, I've seen two Panera Breads not far from here shut down. And again, it's the cyclical nature of food. It just tends to have that life cycle, whereas a lot of other businesses don't,
Yeah.
especially if they're businesses that people are truly seeing benefit from. And I think the health and wellness category is going to be here a long, long
Oh, yes.
time, the way it's growing right now. And I mean, like the one that I bought, Game Day Men's Health. I mean, it is health and wellness for men. There's another one that just emerged, massive upside to it. I love this brand, but it does so much more. It does men and women and does a lot more than Game Day. It's a longevity brand. I'm very high on it and I've put a lot of my clients into it over the course of the last several months.
Oh, okay. And how much is that one to get involved in?
But that was a little more expensive. You're going to probably be in
Okay.
the 800 to $1 million range to get. But again, financing is available. So if somebody comes to the table, let's say with 150,000, $200,000, I can get them financed for the rest of it.
Oh, okay. Okay. Yes, because I'm thinking to myself, I'm really thinking franchises, especially for the high end earner, is the way to go. Because if you're working on a job, you're an executive, if you making, six figures, you working your tail off at that executive job.
Yes, you are.
And you don't want another business where you're doing the same.
Exactly. And that's why semi-passive businesses are so important for executives because you don't want to walk away from that income yet,
Right.
but start building something on the side, replace your income first, then step away and then start scaling it larger at that point.
Yes, absolutely. I love the concept. I really do love the concept. And like you said, you get so much handheld holding.
You do. Yeah. I mean, look, I've done it both ways. I've opened independent businesses. I've opened more franchises than independent businesses. My ego, I think, forced me to try independent businesses, and I did really well with one, but the other ones not so much. All the franchises that I did, I've done really well. Some better than others. And Game Day Men's Health, like I say, that's a home run. I mean, I went from West Coast Video way back when to Hollywood Tans, had a bunch of those, and Massage Heights. Um, and then invested in some others on a more passive basis, and then Game Day Men's Health was the most recent one.
Yes, yes. So you definitely the man when it comes to franchises.
I love the model. Franchising to me makes absolute sense.
Yes. And again, Bob, how do people connect?
Oh, real simple. Go to my website, franchisewithbob.com, or email me at bob@franchisewithbob.com.
Wow, this has been definitely eye-opening. And I'm sure my audience is going to definitely take a whole lot away from it because you've given so much information
I'm glad.
and reasons why this might be a fit for many people. So I definitely appreciate you sharing this and taking time out.
Oh, my absolute pleasure, Ida.
Yes, and we're definitely going to have to do this again because I
Absolutely.
like the model. I like it a lot.
Let's do it.
So thank you so much, Bob, and audience, thank you as well. We truly appreciate you as always.